In June of 2022, the Federal Reserve began a program of quantitative tightening as a complementary policy to raising the Fed funds rate in order to fight the runaway inflation. Quantitative tightening, or QT, is essentially the inverse of quantitative easing, which is a policy where the Federal Reserve creates money and uses it to buy government bonds in order to push long-end yields lower. QT is a policy where the central bank allows the bonds they've bought to expire without reinvesting the proceeds. This acts as a de facto bond sale, and it pushes yields higher. Now, most of the world's central banks joined the Federal Reserve in this policy. However, a new narrative has emerged over recent months, and now central banks are talking about lowering rates. The major question is, if the world's central banks are now embarking on a path of additional liquidity in order to fight slowing economies, what will that do to currencies and currency proxies like gold or Bitcoin? Since spring, Bitcoin has been in a sluggish trading range, moving from a high of 72,000 in March to a low near 50,000 in August. But Bitcoin now appears to be on the move again, jumping from 50,000 to 64,000 just in the last 2 weeks, fueled in part by an announcement from Chairman Powell proclaiming that the time has come for policy to adjust. Of course, the first place traders will watch is short-end interest rates to ascertain the Fed's aggressiveness, followed closely by any announcement that the Fed will end QT and perhaps restart QE in order to fight a coming recession. It will be assumed that loose policies will weaken fiat currencies and could be the next major tailwind for Bitcoin. Now, CME Group offers a suite of futures products to represent a trader's thesis in Bitcoin. The standard 5-coin contract, the micro, which is 1/10 of 1 Bitcoin, and now the Bitcoin Friday futures, which is 1/50th of 1 coin and is a weekly contract that expires on Fridays.